I'm Megan Horniman, the Chief Investment Officer for Verdence Capital Advisors. Before we get started going through the review of the second quarter and our outlook for the remainder of the year, we just want to acknowledge how challenging this year has been for Americans, not just from an investment perspective, but also from an economic perspective. We're looking at inflation running at levels we haven't seen in 40 years, and admittedly, it's staying higher for longer than we had even anticipated. Gasoline prices are surging at the pump and really squeezing Americans' finances. And we're also looking at a geopolitical climate that really hasn't improved much in the second quarter. There's no better chart to illustrate how bad Americans feel at this point than to look at consumer confidence. And in this chart, you can see that consumer confidence right now is lower than we've ever seen at any period in history. That means it surpassed the drop in 2007 to 2009, as well as the low confidence we had in the 1980s. Now, from an investment perspective, I think investors did want some reprieve in the second quarter of 2022, especially after such a dismal first quarter. And unfortunately, what we saw was not only global equities, but also the bond market deliver their worst first half of a year on record. As you can see in this chart, every major asset class was negative. That's the first time that's happened since the first quarter of 2018. Now, from a U.S. equity perspective, we officially entered a bear market. That bear market was deeper in certain areas of the market, specifically those tech-heavy growth, large-cap areas of the U.S. market. From an international perspective, we saw steep declines again. Asia fell the least, and that's primarily because we did see China reopen from COVID lockdowns in the second quarter. Bond investors, again, were disappointed. We're looking at almost equity-like losses in things like high yield, emerging market debt. The short area of the market, those short-term bonds that we've been focused on, they did fall the least and, in fact, were basically flat for the quarter. But again, another disappointing quarter for fixed income investors. Commodities that were really the darling of the first quarter, they saw steep declines in the second quarter. We have many major commodities in bear market territory at this point. The only safe haven that investors would have had in the second quarter would have been in the U.S. dollar.